been a sweltering summer here in the States, with temperatures soaring and tempers flaring over the relentless creep of prices at the grocery store and gas pump. But the inflation woes afflicting American consumers pale in comparison to the rising costs roiling our friends across the Pacific in the land of the rising sun. In a development that would have been unthinkable just a couple years ago, Japan, a nation notorious for its entrenched deflationary mindset and stagnant economy, is now grappling with the highest inflation rates it has seen in 4 decades. According to the latest data from the Japanese government, consumer prices excluding fresh food jumped 2.6% in June from a year earlier, accelerating from May's 2.5% surge. For the Japanese, whose cultural ethos has long been defined by restraint, frugality, and acceptance of humble economic circumstances, this bout of price pressures represents a rude awakening. The stoic resilience that has allowed them to persevere through decades of anemic growth and the deflationary hamster wheel of falling wages and declining prices is being sternly tested. Japan's central bank, the behemoth known as the Bank of Japan, now confronts some tough decisions over whether to tap the brakes on its ultra-loose monetary policy at a time when the cost of living is skyrocketing for its citizens. When the bank's rate-setting committee convenes for its next meeting on July 31st, there will surely be intense debate over the merits of hiking interest rates to try to corral inflationary forces. In a Bloomberg survey last month, a third of Bank of Japan watchers predicted the central bank would go ahead and raise rates at the July meeting. While a minority view, it speaks to the gravity of Japan's inflation quandary that rate hikes are even being entertained. For a country that has spent the better part of 3 decades fruitlessly attempting to rekindle inflationary growth through an endless barrage of stimulus and rock-bottom rates, the mere notion of tighter monetary policy would have been heretical not too long ago. Much like in America, the recent inflation scourge can be primarily traced back to the global energy shockwave stemming from Russia's unconscionable invasion of Ukraine and the supply chain turmoil from pandemic-related disruptions. But unlike in America, where inflationary pressures have been steadily building for over a year, Japan's rising prices seem to strike like a summer thunderstorm, sudden, intense, and catching many by surprise. The core driver of Japan's accelerating inflation has been the government's decision to phase out electricity and gas subsidies that had been providing consumers with a buffer against soaring energy costs. With that safety net withdrawn, utility prices began to spike in earnest. Whereas in May natural gas prices fell 3.2% year-over-year, by June they had jolted upwards by 3.7%. Hotel costs also climbed smartly during the month, compounding the pressure on Japanese households' strained budgets. It's a cruel paradox that this blast of inflation is searing the Japanese just as their economic prospects appeared to be finally brightening after a brutal couple of pandemic-scarred years. The nation's GDP contracted more sharply than originally estimated in the first quarter, but more recent data points to a modest rebound. Exports rose for the 7th straight month in June and worker wages saw the sharpest increase in decades. Yet those wage gains, while ostensibly positive, are already being eroded by the simultaneous surge in consumer prices. The Bank of Japan's latest survey showed that over the next year, households now expect annual inflation to rage at a blistering 11.5% clip, levels not witnessed in Japan throughout the lifetimes of most of its citizens. So for those Japanese families cautiously allowing themselves to dream of better economic days, of finally clawing their way out of the deflationary pit their country has been stuck in for so long, the sudden return of high inflation presents a demoralizing setback. Their hard-won pay raises are already losing value before the ink is dry on their new compensation packages. As with any affliction, the path to alleviating Japan's inflationary fever depends on properly diagnosing the root causes. While costlier energy looms large, the sliding yen and its role in exacerbating import costs cannot be overlooked as a contributing factor. The yen has been getting pummeled on foreign exchange markets, plunging to a nearly 4-decade low versus the almighty dollar in recent weeks. This yen enfeeblement hasn't escaped the notice of Japan's government, which is rumored to have executed a couple of currency intervention operations in a likely attempt to put a floor under the battered yen. While Japan's finance ministry has stayed mum on confirming any intervention, a nation once renowned for keeping a stiff upper lip may be starting to betray a hint of desperation in its efforts to spare itself further indignities inflicted by the yen's downward spiral. Still, there are some economists who caution against overstating the yen's impact on inflation compared to other principal drivers like wage trends and consumption patterns. Kanako Nakamura, an economist at the Daiwa Institute of Research, argues that robust household demand enabled by rising worker pay will eventually become the primary inflationary propellant. overshadowing the effects of the weak yen. As soon as real wages turn positive year-on-year, Nakamura contends, I expect to see a positive spillover effect on consumption. In other words, a virtuous cycle of income gains translating into greater spending may be taking root in Japan in a potential echo of the 1980s and early 90s. Of course, that optimistic prognosis hinges on the Bank of Japan's upcoming policy prescriptions not snuffing out the economic green shoots, just as they are finally starting to blossom across the nation. Excessive hawkishness from the central bank in its zeal to tame inflation could short-circuit the recovery and ultimately backfire by crippling consumer demand right when it is finally revving up. While a delicate balancing act lies ahead for the Bank of Japan, at least there are some indications that underlying inflationary pressures could moderate over the coming months. Newly announced utility and gas subsidies, just approved by Prime Minister Fumio Kishida's administration, are expected to slice 0.5 percentage point off the official inflation readings, once implemented starting in August. Yet even this relief measure underscores the uncomfortable truth Japan is being forced to grapple with in the short run at least. Rapidly elevating consumer prices remain a grim and unavoidable reality for a nation more accustomed to shielding itself from harsh economic winds than having to hunker down and weather them head-on. The path forward promises to be fraught and at times disorienting, challenging long-held assumptions about Japan's deflationary rut. It may prove a crucial test of the nation's perseverance and cultural resiliency. Can the Japanese adapt to the thorny quandaries presented by too much inflation after being conditioned for so long to puzzle over too little? Will the stoicism that enabled them to endure decades of economic stagnation translate into the resolve required to see this inflationary tempest through to calmer waters? For a people who revere the traditions and ceremonies governing everything from the daily rituals of making tea to the annual sakura blossom viewing festivities, the imposition of runaway price pressures appending long-established realities is nothing short of a rude awakening. Just as the spring cherry blossom's fleeting beauty serves as an annual reminder of life's impermanence, perhaps surging inflation will force Japan Incorporated to let go of its outdated Depression-era economic mindset and awaken to the exigencies of a new, less predictable global era. If handled prudently by policymakers and met with fortitude by the public, this inflationary squall could ultimately prove an unlikely catalyst jolting the nation's fiscal and monetary frameworks into the 21st century and aligning them with modern international standards. Nations evolve and endure by adapting to changing circumstances, not by clinging stubbornly to the perceived comforts of the way things once were.